It's Thursday, May 13th, 2021. So much going on, ladies and gentlemen. Before we start, make sure you like this video, make sure that you subscribe to this channel, and make sure you hit that bell notification down below so that you are alerted with the newest video. But without further ado, let's get started with today's video. Again, this is getting crazy. We saw the Dow Jones yesterday down almost 700 points. Today it was up 433 points. This is crazy volatility. This is not normal. We've seen this happen time after time after time, this crazy volatility. And here's a news flash. We're going to see a lot more volatility to come. But this is a warning. When you see this type of volatility, these markets have been warning us for a while. This volatility is not normal. There's more volatility to come, and the volatility is going to get more and more extreme. I think we saw the Dow Jones up today because I think that the Bitcoin crash that we saw yesterday regarding Elon Musk, we saw $365 billion vaporized out of the crypto market yesterday with the news that Elon Musk was not going to accept Bitcoin for the purchase of a Tesla vehicle. $365 billion instantly vaporized out of the crypto market. I think some of that money came into the markets today as the Dow Jones was up 433 points. So a lot of instability, volatility, and more warning signs that something is very wrong here. But I want to get into the news here. We'll talk about a few things. I pulled down some articles, made some notes. I want to share this with all of you. Please feel free to comment down below regarding any of these articles, any of this news. We got the jobless numbers for last week. They came in this morning, and they were not great. 473,000 Americans last week filed for first-time jobless claims. Now, the week prior to that, I believe we lost around 498,000 jobs. 498,000 Americans filed first-time jobless claims the week before that. But that was revised to 507,000. So the numbers last week that we received, the 498, that was revised to 507. Today's numbers were 473,000. We'll see what that is revised to. But needless to say, the news is not good. We are continuing to bleed jobs here in America. And we have an unemployment epidemic. Some people trying to get back to work, many people not willing to go back to work. And so we got a real conundrum here where people don't want to leave their well-paying unemployment to go work in the service sector, to go work in the restaurant field. Getting back to what we started with, as much as $365 billion wiped off cryptocurrency market after Tesla stops car purchases with Bitcoin. That was on CNBC. Elon Musk says we'll stop accepting Bitcoin for car purchases, citing environmental concerns. Believe what you want, ladies and gentlemen. If that's the truth or not, I don't know. But yesterday, I saw Bitcoin down almost $10,000. And, you know, people say that this is a safe asset. I say quite the opposite. When one person can just say we're not accepting Bitcoin to purchase our cars, and we see Bitcoin go down $10,000 in literally a matter of minutes. Right now, as I make this video, it's at $48,900. 3 weeks ago, it was at $65,000. So is this a safe haven asset? You tell me, comment down below. Maybe I'm completely wrong, but I'll tell you, when one person has this much influence on a market, very, very scary. I will say this. It doesn't matter if a bank, if Ray Dalio, if Sam Zell, if any of these people say that they're selling their gold, you are not going to see the gold market collapse like this in double digits. It's absolutely frightening to see how fast things can come tumbling down. Dogecoin falls 15% below 40 cents on Elon Musk crypto about face. That's on CNBC. Also on CNBC, billionaire investor Barry Schnurlet says that his long-term concerns about says he has long-term concerns about the U.S. economy. I'll paraphrase through this article. We're seeing more and more people growing concerned about what's happening in these markets and in this economy. He says we have to get off the sugarcane and fluffernutter economy and get to the meat and potatoes economy. This is what he told CNBC. The chairman and CEO of Starwood Capital Group said he is worried about the labor and supply shortages as well as government policy. Yeah, maybe paying people more to stay at home and not work. He said his bullishness on the stock market has faded. So again, more concerns from people. But we have a problem here when we look at the types of jobs people are going to be returning to. Of course, who's going to go back to work when they're making $750, $850, $1,000 a week to sit at home versus going to go work at the hotel or the laundromat or the waitress job or the bartending job or the coffee bistro job, whatever. Who's gonna do that? But we're not giving people a lot of options here to go back to work, right? Because we're the well-paying jobs. This is a service sector economy now, ladies and gentlemen, where most of it is going to be in the restaurant industry, the bar industry, and it's just not going to be enough for people to pay the bills, and it's not going to be enough to support a first world economy. CNBC, another inflation gauge, comes in hot with producer prices jumping 6.2% in April from a year ago. Yet people were telling you and I there will be no inflation. There's going to be no inflation. In fact, things are going to get cheaper. My question is, when people are forced to go back to work to their service sector jobs, not everybody, yes, there will be people who go back to well-paying jobs, but we are seeing a majority of this country now having to go work in the service sector. The opportunity inequality, the wealth inequality gap in America continues to spread farther and farther apart. And it's a very dangerous combination as we fall deeper into this depression. But when you see 6.2% inflation, in April compared to a year ago, how is the average American going to keep up with these prices? Somebody please explain that to me. Comment down below. U.S. inflation soars in April to 13-year high. CPI shows and reveals fresh stress on the economy. Tell us something we don't know, right? I mean, every one of you, when you go to get something to eat for lunch, you go out to dinner, you go to the grocery store, you pay the rent. I mean, you get it, right? I mean, this is not going to, people think that this is going to go away in a couple months. This is not going to go away in a couple months, ladies and gentlemen. It is not going to go away. And neither is the debt creation, the money printing, the debts, the deficits. None of this is going to go away. And this is really, when you think about it, a perfect storm, because you have people now that don't have a job, 25.7% unemployment in America, shadowstats.com, John Williams. Opportunity inequality, wealth inequality at all-time highs, and this gap is continuing to separate. And it's the perfect storm because prices are going to continue to rise. Food will continue to rise. Rent will continue to rise. These prices are going to go up during the worst possible time while people are continuing to lose jobs. Okay, nearly 500,000 people last week filed first-time jobless claims. Yet, you know, as I watch the television, they don't really talk about it. But if they do, they try to make it out like it's good news. And it's not good news. This is horrible news. And you have to ask yourself, after what, 55 weeks of this, 56 weeks of this, who has a job left? I mean, it's absolutely insanity what's going on. And another thing, going back to these people who are going to return to work, or who they're going to force to return to work, who's going to get full-time work? Answer me this, because everywhere you go, nobody's paying 40-hour work weeks. They're paying you 25, 28, 30, 35. So you're going to now be responsible basically to get two jobs, because you're going to need 25 hours here, 20 hours here. And you'll be working for $10, $12, $15 an hour while inflation skyrockets. But people will have to go back to work, but they're going to need two jobs, three jobs to make ends meet. And it's going to be a real mess out there. Household debt climbs to $14.64 trillion due to jump in mortgages and car loans. People cannot stop spending here in America, no doubt about it. Total household debt balances rose by $85 billion in the first quarter of 2021. So people continuing to buy houses, people buying cars. Nobody's worried about the uncertainty down the road. It is, again, a perfect storm, a recipe for disaster. And we're going to see the worst depression in world history. U.S. spends 90% more than it collects in the first 7 months of fiscal 2021. This is on the Hedge today. The Treasury collected, get this, $2.14 trillion in receipts while spending $4.075 trillion. Now, if you spent more money, if your household spent more money, had more money going out than coming in, how long could you survive? Not very long. You don't have a machine that prints money out of thin air, but many people are doing this. Many people are following what the government is doing, and they're spending more money than they have. They're dependent on the government for these unemployment checks, for the stimulus checks, for the extra $300 benefits weekly. And as they do so, they cannot control their spending. People are literally partying like there's no end here. That the government is going to continue to send them money forever, while they don't pay rent, while they're not paying mortgages, maybe while they're skipping the car payments. Again, a disaster in the making here, ladies and gentlemen. But people continue to spend more money than they have, living way beyond their means, living, in a zip code to impress people, driving a certain type of car to impress people. And many of them doing this on the government dole, waiting for that government and that unemployment check to show up. And I'm going to tell you, ladies and gentlemen, a rude awakening is coming. Reality is coming. It will not be stopped. It is coming. And this is all going to change. But going back to what I said earlier, people doing exactly what the government is doing, spending more money going out than coming in. And people are going to learn a valuable lesson. I believe the United States government is going to learn a valuable lesson as it is now in a corner of 0% interest rates, printing money out of thin air. Now the inflation is coming. What a surprise, right? Just keep printing and printing and printing, and you just believe things aren't going to get more expensive. You think there's not going to be inflation. Well, here it is. It's beginning to heat up, and it can get very heated very, very quickly. And we're going to print more money. There's no doubt. They're forced to print more money. But the medicine is wearing off. It is not fighting the infection like it once did. So what are they going to do? It's more medicine. It's going to take more medicine, more money, more debt creation. And I think most of you watching this video today, 98% of you, know how this ends. It's going to end brutally with massive inflation. It's going to end with a massive economic collapse. It's going to end with a lot of despair, a lot of heartbreak. And it's going to be a really, really serious time here in America. And there's no going back at this point. It is just past the point of no return. The debts, the deficits, this is irreparable, okay? Unrepairable, irreparable. It cannot be fixed. And now we're going to suffer the consequences, okay? And as people continue to live this party lifestyle, this utopia, believing that everything's going to be okay, that the government will take care of it, the Fed will step in, I'll get a good paying job next month, it's going to be okay. If you're thinking like this, you are going to be a victim here. You are going to get wiped out. You need to wake up, get out of the matrix, get out of the bubble. If you have a job right now, if you have a side hustle, if you have unemployment money coming in, you need to be very, very cautious here, and you need to be preparing, not for a rainy day, ladies and gentlemen. This is going to be a massive flood. Colonial Pipeline paid hackers $5 million in crypto ransom hours after the attack. This also on The Hedge. It's on CNBC. It's all over the place. This, again, reminds me, it reminds you, is your money safe in a bank? Are your cryptos safe? Are your portfolios safe in those investment accounts? Is your 401 safe? Is any of this safe? And the answer is no, it is not. And this is why you must be holding hard, tangible assets to hedge against a collapse in the markets, a collapse in your investments, a collapse in your cryptos. This right here, ladies and gentlemen, is so important. And I don't give financial advice, but I'm sharing with all of you what I'm thinking, how I think, how many of my friends think, and people I know very close to me who are very successful, what they're doing, how they're preparing, completely opposite from what people on the television are doing. Many people I know, some of them are in cryptos, but many of them have this also. But most people I know who are very close to me, they see reality, they understand the importance of holding hard assets like this, holding cash, holding silver, holding gold. People continue to write me. Many people tell me it's getting very, very hard. I talked to a very good friend of mine yesterday, trying to buy a couple 100 ounces of silver. And he called a couple of the different internet sites. He was looking for a specific bar. And 4 to 8 weeks to get what he wanted. And as I'm looking at some of the bullion dealers online, you can still get it, expect to wait a little bit, but most gold and silver is out. I would say from what I'm seeing, 80% of gold and silver is out of stock. Most of it says to be notified when it comes in. Some of it you can still get, but expect waits. I deal with SD Bullion, link down below. I don't care where you buy it from. This isn't a commercial for SD Bullion. I've been dealing with SD Bullion for 2 years. They've been fantastic. I do have a link down below. Check it out. I think it's hard to compete with their prices and their timeline. But again, I don't care where you buy your silver or your gold. You can go to the pawn shop. You can go to the coin dealer. You can go to anyone you want online. Just make sure it's reputable. And at the end of the day, I don't care if you buy it or you don't buy it. I'm not here to sell you anything. I'm not here to tell you or brainwash you to do anything. I have a microphone. I have a camera. I'm very concerned with what I'm seeing. We just saw $365 billion in the crypto market wiped out last night. Okay, we're seeing massive inflation. We see massive unemployment. We're watching a massive debt. We're approaching $29 trillion, $166 trillion of unfunded debt right here in America, ladies and gentlemen. So, you can do what you want to do, but I'm telling you, this is what I'm doing. For me, it's cash, it's gold, it's silver, and I do gamble with some mining stocks. That's what I'm doing. If you want to gamble in cryptos, you want to gamble in the overvalued stock market, the overvalued housing market, go right ahead, do whatever your heart desires. So I'm going to leave it right there today, and I'm going to close this video out. Again, we are just seeing so much craziness going on. It'll be very interesting to see what happens tomorrow. But this volatility in the crypto market, the volatility on the stock market, it's telling all of you something. It's sending you a warning that none of this is normal. This is not right. And just think that with all of the trillions of dollars of injections into these markets, into the economy, this is where it is. This is where we're at. Another, 477,000 people file first-time jobless claims. We lose nearly 700 points on the Dow yesterday, up today, 365 billion vaporized in the cryptos. Right now, to me, it is all about protection. It is about stability. It is about protecting wealth. Again, you can go gamble all you want. That's up to you. For me, I'm playing it very conservative. I will jump in the stock market when it crashes, when the sales are everywhere, okay? That's what I'm waiting for. And as I see the bubble inflating and inflating, yes, it may inflate for a while longer, but as history has taught us, every bubble pops. We are going to see tremendous sales in the stock market and incredible sales in real estate. And those sales will transition over into the auto industry too. Everything's going to go on sale. Right now, we're seeing massive bubbles in the auto industry. We're seeing massive bubbles in real estate, the stock market, the bond market. It's everywhere. So is this really the time to be taking money and buying into bubbles, or sitting back a little bit, being patient, adding to your tangible assets like gold, like this stuff right here? This is the stuff that's on sale. And I say buy what's on sale, buy what everybody else is overlooking. Not everybody, because when you look at the price of silver now, I mean, for $42, I think right now for an Eagle, $35 for a maple leaf on SD Bullion. So it's not cheap, but I'll tell you what, if you cut out some coffees, you cut out going to dinner, you can buy some of this stuff. But it's extremely cheap compared to the bubbles in the crypto market. It's extremely cheap compared to the bubbles on the stock market. It's completely cheap compared to the housing bubble. And when all that stuff crashes, well, then you sell some of this and you buy some real estate, you buy some stocks, you take some of that cash that you put away and you jump into the stock market and you buy it, and you're going to buy it cheap. Right now, you're getting suckered, in my opinion. Anybody buying into these markets, whether it's the housing or the stock market, you're getting suckered. That's my opinion. I don't give financial advice, but again, this is what I would tell my family members, my friends. This is what a lot of people tell me too. Anybody buying in this is a sucker. So be cautious out there. There are people making money in crypto. There's no doubt about it. But again, this is a marathon, not a sprint, ladies and gentlemen. We're going to find out who is going to survive this collapse. Remember, cryptos haven't been tested. Gold and silver have been around a long time. They've seen a lot of bad times. They've seen some bad depressions, some bad collapses. They've seen fiat currency collapses. And guess what? It's still here. And this is what the central banks are stockpiling, not cryptocurrencies. This is what my friends are stockpiling. This is what the Sam Zells and the Ray Dalios are stockpiling. This is what the Jamie Dimons and the JP Morgans have vaults loaded with, okay? So just my opinion, but that's a fact. So again, be cautious out here. If you're making some money in these markets, if you're making some money in the cryptos, make sure you're pulling some of those profits out. I'm glad you're making money, but I want you to protect yourself too. Pull some of those profits. Buy something that's going to be around for the next 5,000 years. I'm going to leave it there. God bless every one of you. Thanks for watching. Share this video, and I look forward to talking to all of you very, very soon.